Hey everybody, Darren Garman here with Trot.
Darren, how's it going?
I am doing wonderful. How are you doing, man?
Great.
Very well. I'm glad you are here, and I'm glad you are here. Trot and I are glad you are here, whether you're watching or listening to the Heartland Multifamily Show, the place
for all things multifamily.
For all, 3 letters, but pretty significant word, man. It's all things multifamily. And we're excited to talk about this because we've been dealing with multifamily sellers now quite a bit over the last, couple of weeks or so.
Yeah.
And it really got us to discuss some of the things that we have been seeing, especially in this market. And really not only what we see in this market because it applies to what's going on in the market as of the time we're recording this podcast. But I mean, this is kind of an evergreen thing. I see this happen, in other markets at other times, but really specifically in a market like this. And what we're going to be talking about today are 3 big mistakes that multifamily sellers make. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. Three big mistakes multifamily sellers make, and these mistakes literally cost them anywhere from, tens of thousands of dollars to some cases, millions of dollars. And so what we're going to be doing on this episode is really doing 2 things. Number 1, you and I are going to expose these 3 mistakes, make sure that we expose what these 3 mistakes are, and we're going to talk about those mistakes in terms of what kinds of things you should be doing, should be thinking, should be strategizing in terms of your multifamily strategy when it comes to selling your multifamily property.
I thought we talked about this before.
All right, now, if what we talk about during this episode resonates with you, would love to get your comments below. And of course, if what you like what you hear or listen to, want to subscribe to our channel, please make sure you do. Would be glad to have you as one of our folks that have subscribed. Looking forward to that. So Trot, let's talk about the 3 big mistakes, okay? I'm going to let you lead off with the 3 big mistakes. And again, so let me just kind of do a quick 15-second preface of this. We see this a lot, these 3 mistakes a lot, especially in this market. So we're going to talk about that. But we see this, at other times too. So what we're going to be covering is pretty much what I would say evergreen. It's something that kind of continues to go on and on. But especially in this market we're in today, pretty applicable. All right, Trot. So if you were to say what the number one mistake that multifamily sellers are making, what would that be?
I think it's being too attached to falling in love with a property.
Yeah, too attached, too emotional.
Yeah, there's too much sentimental value in this property or whatever property it may be.
Yeah, we see this a lot, and it's kind of funny because it kind of flies in the face of what you would conventionally be thinking, because conventionally you think, as a homeowner, as a condo owner, my own home, my own condo, yeah, I'm pretty attached. I'm pretty attached to my home or condo, love my home or condo, and so there's a lot of emotion involved in that. And you would, I guess, again, theoretically would think, well, that really shouldn't be the case with investment property, but we find many times that many owners are just as attached to their investment property, in this case, multifamily property, as they are with their own home or condo that they own. Would you agree with that?
Yeah. Oh, yeah. I think so.
Yeah. And the main reason that this is the case, and we see this not only with what I would call like maybe smaller owner operators, 4 units, 8 unit, 12 units. Okay. But we see this with 100, 200, 300 unit apartment communities, especially if they are owned and or managed by owner operators that are a family, number one, or have a really good foundation in the community that this multifamily property is in. Okay. And so why is this? Why do people fall in love with their property? And there's a bunch of reasons, but I'm going to give you the main reason it is. Really, at the end of the day, a multifamily property, again, large or small, is pretty much a business.
Yeah.
I mean, it pretty much is. And so when you are pouring your time, effort, energy, we could be dramatic and say our heart and soul. We could be dramatic and go into that. And you're pouring that day after day, month after month, year after year into that property. It's kind of hard not to be emotionally attached to it.
Right.
Right? It's kind of hard not to be. So when you and I sit down with folks that are looking to have us assist them in selling their multifamily property, they bring us in, want us to consult and help them, through that selling process. We're not surprised that we see this. We're not surprised at all that we see this. And as a matter of fact, one of the first things that we tell these owners when we are sitting down and having the conversation with them about strategy, about the direction that we think they should go with the sale of their property, timing, those kinds of things. One of the first things we talk about is this, isn't it?
Yeah.
Yeah. So as a matter of fact, then the conversation has to turn to what's the bad news we got to tell them about this, Trot? What do we have to tell them? Even though they know this, they already know this, but what do we have to tell them when we have that meeting with them about this?
Well, one, they got to ignore their emotions
Yeah.
and their connection to the property. And two is once it's gone, you just got to let it go.
Yeah. Yeah. You've got to now really treat it as a business and really take the emotion out of it. And we have this, again, conversation more often than you would think. And what trips up a lot of owners is they do fall in love with their property and they automatically become what I would call resistive. They become resistive to negotiating. They become resistive to the reality of the marketplace at that point in time. They become resistant to consulting, advice, strategy on what to do and how to do it, in a certain market or at a certain time. Now, we're not lumping all the owners into this, of course. Not all owners are like this. But when you fall in love with the property and you're resistant to the feedback and the world of reality that is going on at that point in time, and you don't take your emotions out of it, especially if you want to sell, a lot of times you find that you didn't sell the property. And it's not because of the property. It's not because of what it's doing or not doing. It's because of what?
Your emotional connection.
The connection. Yeah. And we see this more often than not. So number one big mistake is get rid of that emotional connection. Become, this is going to sound a little weird, emotionally okay with letting that emotion go in the process of selling your multifamily property. Again, easier said than done. We know, we've been there, done that. Okay, so that's number one. Let me hit number two. I want to hit number two because I see this a lot. And as a matter of fact, you and I dealt with this not that long ago. Number two is not fully considering what an old timer like me would call a bird in the hand. Okay, a bird in the hand. And so if you're not familiar, if you don't have as much gray hair, you don't have as much hairline that's receded as me, and you may be wondering,
I'm good.
You okay?
Yeah,
you all right?
I'm good.
What's this bird in the hand thing? Bird in the hand is another way of saying, you should really consider the offer or the interest you have in that property right now and really consider working on that versus thinking a better deal is coming along, versus thinking the grass is going to be greener a little bit later. When you've got for example, maybe an offer or a price that's really, really close to what you think the property is worth. Or in some cases, maybe you're getting more than your asking price, but you think there's still a better deal coming. You're still a better deal coming. And you don't take into account, I got that bird in the hand. I'm going to wait for something better.
Right.
I'm going to wait for the greener pasture to come. And sure, once in a while, a very small percentage of investors, of owners, are they lucky and get that?
No, and we ran into that not too long ago.
Yeah.
I'd say about a year ago. The grass was greener, and then, the seller lost out on 20% of, what they thought they were getting.
Yeah.
Because the grass was not greener.
Yeah, we saw this, and you're citing an example because it was a big money example.
Yeah.
Where, these folks could have walked away with, just a ton more money than what they actually ended up walking away with. And it's because of this. They didn't take that bird in the hand. And this is especially true. Let me back up and let me make sure that I clarify what we're not saying. What we're not saying is that you take serious discounted offers. You take serious lowball offers. You take serious, someone that really doesn't have much of an interest. So we're not saying you bend over backwards for offers and or interest in your multifamily property that's not even close to what you think the value is. We're not saying that at all, right? What we're saying is when you've got something that's right there, but you're like, I think I'm gonna wait for something better.
Yeah.
I think I'm gonna wait for something bigger. All right, we're gonna take a quick break. I hope you're enjoying this episode. I'm going to be having a free webinar coming up, the link's below, on how to correctly and with low risk invest your IRA or 401k in really good multifamily properties. A majority of our investors do this. I do this personally. It's not illegal. Make sure you click the link below. We'd love to have you. That is a recipe for problems, especially if you really want to sell. Because more often than not, and Trot hit upon this, what we see is when people exercise this as a strategy, 9 times out of 10, not 10 times out of 10, but 9 times out of 10, they end up walking away with less money than if they would have taken that bird in the hand and actually move forward. Are you surprised by how often that we see this?
Not really. Because the biggest thing that people see when they get some sort of offer is the price tag. I mean, that's the one thing they truly care about.
Well, that's especially if they get an offer fast.
Yes.
So right. the property's on the market on a Monday, and Monday night they got an offer. Now they're thinking, oh boy, right?
So if I got one this quick, well, then I'll probably get 10 more in the next 2 weeks.
100%.
And they're just going to keep going up and up and up and up.
Yeah.
And a lot of times, they ignore the contingencies and stuff like that.
Mm-hmm.
And so the only thing that matters is that dollar sign. Well, is this buyer even qualified? Who knows?
Mm-hmm.
Or have they done any other business in the area? What do they own right now? Can they afford this? Stuff like that. But it doesn't matter because of that number. And if the higher it gets and the more it keeps going, the more problems they'll probably run into as well.
Yeah, and the greed factor kind of takes over, and again, we're not lumping all multifamily owners in this one basket, of course not. But for many, a lot of that we've dealt with, especially over the last year, that greed factor has really kind of kicked in. Despite our advice in terms of strategy, they've gone ahead and wanted to extend it, thinking that they're that bird in the hand, they can put it aside and a better deal's coming. When at the end of the day, either one of two things have happened with many of them. Number one is they wasted another 30 to 90 days getting basically the same amount of money that they would have gotten pretty close if they would have just pulled the trigger earlier. And or what we don't like to see happen is multifamily owners end up getting less than what they could have gotten before. And you may be thinking, well, why would somebody take less later on down the road? Wouldn't you just keep the property on the market? Well, keep in mind that everybody's got their own motivations to sell and when they want to sell, and in some cases have to sell. So that factors into some things too, which makes this actually even more important in terms of what we're talking about. Okay, so let's see, those are two things. So we've talked about falling in love, with the property. You touched upon that. We talked about the bird in the hand, situation that we've seen. So let's hit the third biggest mistake that we see multifamily sellers making, especially in the market that we're in today. Trot, what would you say the third biggest one would be?
Well, I think you actually mentioned it right there when you were saying it. You mentioned the market. I think it's not understanding what the market's doing at the given time.
Yeah.
Not following it, whether it's you're not following it or not understanding it. I think you have to do both.
Yeah. I think that's a really, really good one. And arguably, this could be the number one mistake. And let me give you, and you're going to really relate to everything I'm going to say. Let me give you just a quick, brief synopsis of conversations that we have with multifamily owners more often than I would think we would have. It basically goes like this. Multifamily owner, yeah, I want to sell my 36 unit, 48 unit apartment community. Great. Darren or Trot, well, great. We think that the value is $1.5 million. Multifamily owner, wait a minute, I thought it'd be worth at least $3 million. Well, wait, why do you think that, Mr. or Mrs. Seller? Well, because I just think that's what it's worth. Mr. and Mrs. Seller, do you know what the market is doing? Do you know what rents are? Do you know where interest rates are? Do you know what the lending climate is like? Do you know these things in terms of kind of baking it into really where you can see, well, I don't really know where some of that is. I know that Bill down the street, I think, is getting, $1,000 a month per unit rent. So am I. And so I think mine are worth what Bill's might be worth if Bill were to maybe decide to sell. And then you find out Bill's actually renting for like $900, not $1,000. So that quick synopsis, even though it might sound a little bit on the ridiculous side maybe, is more close to reality sometimes than what you would think based on conversations that we have with owners and sellers. And look, it's not as if we would expect an owner or seller to be perfect, okay? 100% on the market, knowing every single minute detail out there in terms of what really then kind of bakes into not only the value of their property, about how quickly it would sell, how much interest there would be. We don't expect owners and operators to know that right off the top of their head and be perfect. But, I mean, what do we expect?
To know a little bit,
yeah.
And I think the other thing too that we see a lot of right now, or hear a lot of, is 2.5 years ago we could have, it's not 2.5 years ago, and that's just part of keeping up with the market. I mean, interest rates aren't at 3.5%, 4%. Values aren't, they're probably down 10-15%.
Yeah.
So again, it's not 2.5 years ago.
Yeah, and you can almost frame part of what we're saying with mistake number 3 as not being in tune with the market. And you could also frame it like this: you're late.
Yeah.
You're late, and you don't know that you're late. I mean, you could almost frame part of it like that, couldn't you? Yeah,
and I think being late is relates to the greed that we were talking about in number 2. And thinking the bull run is maybe a little bit longer than it actually was. Yeah. So, Frank sold his apartment community for $200,000 a unit 2 years ago. I think I should get at least $225,000 a unit for mine. Well, interest rates were 3.25%. Now they're 8.5%. So, I really don't think that that's going to happen. But and they're like surprised by, what? Really? You're kidding me. And again, so we're not number one, lumping all multifamily owners in that basket, but more are not understanding and knowing the market or living in the past with where the market is than what you would think. Okay. And so, we've talked about these 3 things, these 3 big mistakes. And even though they don't sound like major mistakes or,
huge mistake. How do I want to say this? Mistakes that could cause huge losses directly, but indirectly, they certainly can. Indirectly, one of these mistakes, just one, can do is really put into motion a seller, and maybe it's you, a seller of a multifamily property, walking away from the closing table with a lot less than what they deserve. I mean, because at the end of the day, if you own a multifamily property, especially if you're an owner-operator, the amount of time, effort, energy, and work you've put into it, you deserve every damn cent you can get when you sell, right? You deserve it. And, there's almost nothing more depressing than to see owners walking away from the closing table after all of that work with less than what they should have got, right? With less than what they should have got because of one or more of these mistakes. And what happens if more than one of these mistakes is going on and we're in that process of selling?
Even less money at close.
It is. Yeah, it is. It's even less. And I mean, that's probably not a big revealing thing to people listening or watching. But you throw these three things together and it could be a closing that just does not go well. And really what might have started out and over the years been a great multifamily experience. I mean, you end up walking away with a lot less than what you should have or could have or potentially could have. All of a sudden that great experience might not have been so great.
Right.
So think about these three mistakes. Take the time to make sure and identify and do kind of a quick self-analysis with either you, maybe part of your multifamily team, maybe part of your management staff. Make sure that you've got these three things locked down. Falling in love with the property, bird in the hand, not being up to date with what's going on in the market. Make sure that you're not right now, as you own your multifamily property or before you decide to sell it, now is the time to make sure that you're locked in on these things and they don't exist rather than finding out when it's too late. Right. So I think we've covered these pretty well. I think we've been given some pretty good content on these three mistakes. Trot, you got any last minute comments or takeaways regarding these three?
No, I don't think so.
All right, cool. So, Trot, on behalf of you, I want to thank all of you for joining us on this episode, The 3 Mistakes to Avoid When Selling Your Multifamily Property. Glad that you decided to join us, to watch and listen in. Appreciate you, and we'll talk to you soon. Have a great day.